Hey guys, welcome back to the channel dedicated to helping you earn more, spend less, and invest the difference. Now today we're going to be talking about taxes and why everybody needs to have their own small business. Now when people think about owning small businesses, maybe you think you've got your own store, your own restaurant downtown or something like that. But it doesn't have to be that. It can be significantly smaller than that. Maybe you sell some stuff online on Etsy that you make. Maybe you do some babysitting on the weekends. Maybe you drive for Uber and Lyft. I don't care what it is. Maybe it's just a side hustle that you do to earn some extra money. But whatever it is that you do, you have got to have a small business. So a real quick survey. If you think the US tax code is fairly written, raise your hand. Yeah, I can't see you. You can see me. But I already know that you're not raising your hand because the tax code, let's face it, is rigged. The entire system is rigged in favor of the rich. That's why the rich get richer and the poor get poorer. But how is the tax code rigged? It's rigged to favor business owners because business owners are usually the wealthy people and they're the ones in power and they're the ones peddling their influence and getting the tax code written in their favor. So as soon as you become a business owner, now you can take advantage of the same tax breaks that these wealthy guys are taking advantage of. Once you become a business owner, you can start applying for business credit and business credit cards. You can take advantage of the PPP, the Payroll Protection Program that the US had during the coronavirus. And most importantly, you can take advantage of those crazy business tax deductions. Now it's important to realize that your personal deductions and business tax deductions are completely separate items. Most people, including myself, when they're filing their taxes, they take the standard deduction, so they don't itemize any of their taxes. But the standard deduction is a personal deduction, and that personal deduction is different than your business deduction. So I'm able to claim the standard deduction on my taxes as well as all of my business expenses. And what kind of business tax deductions can you claim? Well, here's where I say that I'm not an attorney, I'm not a tax professional, so consult your own professionals. This video is for entertainment purposes only. But generally speaking, anything that is considered ordinary and necessary for your business can be written off as a tax deduction. But what is ordinary and necessary for your business can oftentimes be pretty liberally interpreted. There was a famous case that featured an exotic dancer and, well, she had some work done. And she wrote that medical procedure off as a business deduction. And the crazy thing was, it held up in tax court. It was a legitimate business expense. The reason being is because men like women with big personalities. And so by having this procedure done, she was able to earn more money at her job. She increased her revenue at her job, and that's why this was a legitimate business expense. Another famous case, there was a couple that owned a junkyard, one of those pick and pull places where you go out and you take apart cars and get whatever parts you need. And they had some cats running around the yard. That way it killed off all of the rats and snakes that kind of accumulated in places like that. Generally speaking, making it safer for the customers. And so they were able to write off all of their cat food and all of their veterinary expenses for these cats as legitimate business expenses because they made the place safer for customers. Bodybuilders are able to write off all of their supplements and all of their body oil that they use to lube themselves up for competition. As long as you can justify it of why you need these expenses for part of your business, then you can write it off as a tax write-off. So back to the real world for a minute. Maybe you drive for Uber and Lyft on the weekend, and who knows, maybe you just do it once a year. But even at once a year, maybe you have a spare bedroom with a computer set up where you do your accounting for your business and you do your taxes for your business. As long as you don't use that room for anything else, you only use it for your business, you can write that room off as a home office deduction. Now, generally speaking, there's two different ways you can write it off. You can calculate the actual expenses or you can take the easy way. The easy way is you just get $5 per square foot of your home office up to 300 square feet. So if you have a 10 by 10 bedroom, That's 100 square feet. That's a $500 tax deduction just for your home office. And while you're out driving for Uber and Lyft, you're actually going to be, driving. So once again, you can take the actual business expenses for the mileage and tire repair and oil changes and all that kind of stuff, or you can take the easy way out and just take a flat 57.5-cent deduction for every mile that you drive. So if you drive 1,000 miles a year for your job, that comes out to a $575 tax deduction. Now obviously when you're driving for Uber and Lyft, you need a cell phone with GPS on it. So now suddenly part of your cell phone becomes a business expense. And the easiest way to do this is to calculate how much you use your cell phone for business and how much you use it for personal, and kind of create a ratio system. So let's say that you drive for Uber and Lyft 40 hours a week, you do it full time, and then maybe you use your phone on a personal level, maybe an hour a day checking Facebook and texting and all that kind of stuff. So let's just say you use it personally 10 hours a week. So 40 hours for your business and 10 hours for personal, that's 50 hours total. So 80% of the time, your cell phone is a business expense. That means that 80% of the cost to purchase a new phone, maybe you go out and buy a new iPhone 12 or something like that, 80% of the cost of that phone would be tax deductible. 80% of your cell phone plan would be tax deductible. So if you buy a phone for $1,000 because you need it for your business, then that could be an $800 tax deduction. If your cell phone bill costs you $100 a month, then $80 of that could be considered a business expense and get written off on your taxes. Do you need one of those little cigarette plug-in lighters and a cord and one of those things to stick on your dash to actually hold your cell phone while you're driving around? All of that stuff can now be tax deductible. Now for myself, I own real estate. I have numerous rental properties and they're scattered throughout the nation. So I don't take vacations. I go to check up on my rental properties. So before coronavirus hit, I flew out to Las Vegas. And I didn't fly out to Las Vegas to do some gambling or to catch some shows. I flew out to Las Vegas to check up on my rental properties. It just so happened that while I was in Vegas, I did some gambling and I caught a few shows. But because the primary purpose of my trip was for business, that meant that my airfare was now suddenly tax deductible. My hotel stays was tax deductible. My rental car, parts of my meals, all of that stuff was considered now a business expense. It wasn't a vacation. But on top of the trips themselves to go see the property, I can claim a ton of different things on my taxes as business expenses. So my HOAs for all of the properties that I own is tax deductible. Any kind of closing costs or real estate agent fees that I pay to buy or sell a property is a business expense. My homeowner's insurance, my property taxes, the money that I pay my property management team, any kind of repairs or fixes that I have, all of that stuff is tax deductible. In fact, I can depreciate my house. If I go out and buy a $200,000 house, then over the next 27 and a half years, I get to depreciate that house. So over that 27 and a half year period, I get to claim a $200,000 tax deduction because I bought an asset for my business and that asset cost me $200,000. So as you can see, guys, the US tax code is rigged in favor of business owners. As soon as you become a business owner, then you can find creative ways for all of your expenses to become business expenses. I mean, even just to run this YouTube channel, I had to buy some studio lights, some ambient lights, the red lights you see behind me. I had to buy a camera tripod. And my old cell phone had like a crack in the lens, so it didn't take very good pictures anymore. So last year I went out and I bought a new iPhone. All of that stuff I claimed as business tax deductions because it was necessary to create my YouTube channel. So ladies and gentlemen, if you haven't already, you need to start a business of some sort. The sooner you start, the sooner you can start claiming all of those great business tax deductions. If you found this video useful, be sure to subscribe, leave a comment down below, and as always, I'll see you all again next time. Thanks.